Hey, what's going on, everyone? Matthew from therighttrader.com back again with another video. Today we're going to be talking about space stock, Virgin Galactic, and kind of where I think it's going to go next, right? It obviously fell from its all-time highs that it put in at a pretty impressive $42. So it's a stock that really had a lot of hype behind it, and there is still a full-on community sort of backing the company and the stock, which is pretty cool. They've gotten some contracts, so it's not just purely based on hype, right? They actually have some concrete things behind them on a fundamental level now. And that's especially interesting for the future. Obviously, in an economic time like this, it may not be the stock that a lot of people are paying attention to, but nonetheless, I know that a lot of subscribers of mine have seen my videos in the past that I made on it, and I was actually one of the first YouTubers to make a video on Virgin Galactic. I said that I really liked it, and that I actually predicted the move to, $35 was my target. It ended up beating that and went a little bit higher, like we saw, to $42. But overall, my my estimate was extremely accurate. And when we reached those sort of all-time highs, what did I say? I said that we were going to fall back lower, unfortunately, because it was just unsustainable, right? We can see on the chart over here just how much out of the upper Bollinger Band we were. And that's why I pointed out that, unfortunately, we are going to get a pullback, and that's exactly what happened, right? So I said that we were probably going to head to somewhere between $15 and $20. On the low side, we could hit that $12, and that's what happened, right? We fell lower. We got that sort of downtrend, you could say. The good thing with that, though, I will point out, is we did actually move out of the downtrend, right? So if we take a look at that initial downtrend line, we're fully out of that. Even this new downtrend line that had formed, we're out of that as well. So we're not really downtrending anymore. In fact, we're really range bound here is the right word, right? We're range bound between $12 and $20. So as of right now, we're more or less exactly around $15, and there's a fair chance that we end up consolidating more in this area. So what that would look like is a continuation of the Bollinger Bands that we have right now. So pretty much just this flat movement where we'll bounce a little bit up and down, but we should stay somewhere around $12 or $15. And there's a lot of signs pointing towards that, right? We got the RSI kind of flat right now, pointing in just a straightforward direction. As far as the Bollinger Bands and the actual moving averages here, you can see this yellow line and the white line. It's a pretty similar story, right? Pretty flat as well. So a lot of signs pointing towards some consolidation here. However, I did want to point out that we do have still an unfilled gap, unfortunately, quite a bit lower than where we're at now. And I had already pointed this out before, that in the worst case scenario, we would go and revisit this gap. So if I go back over here, right, just to go over what I'm talking about, what we're going to see is these gaps need to be filled for the most part. Now, there is an exception with this one here. And I had actually mentioned this back in my previous video, because the exception to the rule here is the fact that this gap over here is actually a gap that could end up being unfilled just by the fact that it's, at a very low level, that it could be somewhat hard to reach that level again. And for a gap like that, there is the chance that it actually remains unfilled. And if there's any gap that would remain unfilled, it's going to be this type of gap, right, where we've already moved quite a bit past that price level to the point where it could be unlikely that we actually end up returning to fill that gap. And let me go ahead and zoom in a bit here just so you can see the gap that I'm talking about more precisely. But as you can see here, I know that the chart is a little bit messy. Let me go ahead and remove some of these trend lines. But what you're going to see is right over here, let me zoom in a little bit more, is a gap up, right? So a gap is where, as you can see, we jumped higher on the next day opening, and that created a hole in the price chart. So we need to come back down usually to fill this gap in. This is a very common pattern. I talk about it in my technical analysis master course a lot. If you want to learn about gap fill theory, check out the course, less than $20. We've gotten great reviews. A lot of people checking out the course. Thank you so much. As you can see, more recently on the chart, right, we had a perfect example of a gap fill right over here, right, where we fell lower and we created a gap. And guess what? Just 2 days later, we ended up closing that gap again. So that can happen, right, where we close the gap very shortly in time, right, where it's a matter of days before we close the gap. And usually what that means is we close the gap to then continue the move that was happening, right, so that we don't have to then come back all the way up to close that gap. What happened here is we got the gap, we've quickly closed it to continue the downtrend. So now we just need to be mindful that if we fall below I'm going to say, $12 or definitely below $10. If we fall below that, right, we're going to start to really look at this gap and realize that it becomes almost likely at that point that we're going to test that level, and that gap is around $7.65. So keep that in mind, I'd say. Keep that in mind. And right now, we are neither bearish or bullish on the chart itself, right? We're just very stable. It looks like nothing bad should happen, or there's no signs of any crazy moves happening as of right now. But I'd just say watch out for that $12 level, because that's where our 200-day moving average is as well. So I'm going to say if we move below $12, there's a pretty high chance that we end up moving below $10. And at that point, we would probably revisit that gap at $7.65. Other than that, I think that, if you like the stock itself right now, well, you can get it at a cheaper price, right? And that's not financial advice. That's just my personal opinion. You could maybe, in the next couple of months, if we drop lower, get it in at a cheaper price. But, compared to that $42 level, we got that drop, right? That's an over 50% drop there. And, if the hype is going to come back in this stock, which I have no doubt that it eventually will, well, this is going to be that cheap price for it, right? That's kind of how I'm seeing it. So with that being said, keep in mind, not financial advice, just my personal opinion. I'm going to have some live streams soon where you're going to get to ask me about stocks live, and I'll be able to check them out, do the analysis for you live. So I think it's going to be really cool. Make sure to leave a thumbs up for that. Subscribe if you haven't already. Don't forget to check out my Twitter as well. And that technical analysis master course, just a few more days of the discount here, where you can get the course 25% off with the discount code TwitterFam. Check out my Twitter, link in the description. And yeah, get the course for less than $50, 30-day money-back guarantee. Try it risk-free. You've got nothing to lose. Thank you so much for watching, everyone. Stay safe and have a great day.